Hello traders, how are you? Welcome back to this video. My name is Anthony. So today is on Sunday and we know as usual on Sundays we do our analysis to get ready for a new week. So before I kick off my the video, so let me start by asking you how was your week? So did you take any trades? For example, like on my side, that week wasn't that good for me. I didn't take trades, but we are hopefully that this week will be good. And for that matter, I would like us to do our analysis. So let's have a quick analysis. So as usual, we know very well we do start our analysis with the DXY, and this is what I have for the DXY. Then from there, we'll have some other pairs with me that I would like us to do analysis. So starting with the DXY. So after we saw this sweep of liquidity here, remember I told you we are expecting all these liquidities to be taken out, and we can see the market on this week the market cleared all the liquidity that was available. So the only other liquidity that we were expecting to be cleared is here, because we got a change of character here, so we're expecting the market to take out this high, because this high is a weak high. Now on Monday this week, the market opened with a, what we call a new week opening gap. We had a gap right here. So we expected the market to retrace here before pushing up, but the market was in a strong momentum towards the upside, so market left that gap there. So going down to 4 hour time frame, you can see very clearly this is the last break of structure. Then this was our strong high. So the market, we had a change of character there. Then this week we got a break of structure right here. So you can see this break of structure is a strong one because it cleared liquidity down here. We have a sweep of liquidity, then market reacted off of this order block, then push to the upside to break the structure upside here. So I'm expecting, remember when the market clears the external liquidity, so we are expecting the market to take at least one of the internal structures before continuing to move to the upside. So now that, remember this order block, we have drawn it from the daily time frame, so I can still refine it to 4 hour order block, and that is our order block. So I'm still expecting the market. So this is what I have. If I refine it into 4 hour time frame, you can see very clearly we have our order block down here, and above it we have that gap. So I'm expecting the market to push and fill this gap, react off of this order block. Then from there we can take a buy targeting this high. So from my DXY, I know very well we are bullish. So that means what? I should be bearish on Euro USD and GBP USD. Now, I just want to make this video to be a little bit short. I don't want it to be long. So that is what I have on the DXY. So I'm expecting a pullback towards this area. Then from there, we can take a buy. Because remember, in every time the market leaves a gap, we're expecting the market to come back and fill that gap. So that is my anticipation on DXY, expecting such kind of movement. Now going to Euro USD, going to the Euro USD, let me start from the daily time frame. So from the Euro USD, you can see very clearly, although Euro USD never took this liquidity down here, but it cleared the liquidity below this low. You can see here, market cleared the liquidity below this low, but never cleared this liquidity down here. Now going to 4 hour time frame, you can see very clearly here, the market also took out this external liquidity here. So during last week, not last week, yeah, last week, let me delete this. So the market reacted off of this fair value gap here. You can see this gap between the low of this candle and the high of this candle. Market reacted off of this fair value gap and pushed to the downside. Swept this liquidity before pushing to the downside. So we have a break of structure right here. Now, after this break of structure, because of the DXY, guys, because of the DXY. Let me go to 1 hour time frame. I want to show you something. Here on the 1 hour time frame, I have this setup here on Euro USD. But I don't think whether this I is going to hold. Remember in the DXY we are expecting uh, a pullback. We have said we are expecting a pullback towards this order block down here. So and that low that you can see on the Euro USD, it is this low. So because the market took out the external liquidity, I don't expect this low to hold. So I'm expecting this low to be taken out. But remember in trading, anything can happen, guys. Market can decide to react from this low here and push to the upside to break this high. So what I will do, because you can see very clearly this order block, this eye is a strong eye because it cleared liquidity before pushing to break this low. So what I'll do, I will wait for a confirmation in this area. I will wait for a confirmation here, either in 1 or 5 minutes. Yeah, in 5 minutes time frame. If I get a good confirmation, then I will take a trade from this zone. Are you getting? If this area gets to be violated, so let me go to 4 hour time frame and check whether we have any. Uh, uh, so if that zone is going to be violated, because here I can't see any good zone, the only other zone that I can see, it is this order block here. You see, we have this 4 hour order block that is sitting here. So if this order block fails, then we have this other order block here. I can't see any other good valid order block here because everything here is mitigated. So that is it. I'll be watching this area and this area on the Euro USD. Let me go to GBP USD. On GBP USD, starting from the daily time frame, remember from our previous analysis, we say the GU is the one that is moving clean. It doesn't have a lot of noise. It's moving the same as the DXY. You can see here we had a change of character. Market retraced to this external at the extreme order block here on of our daily time frame, and they reacted from there. Then it has been pushing to the downside. Now you can see here this was the last break of structure. You can see here we had our last break of structure here before the market traded to this order block. Now you can see here we have market swept liquidity here. Remember on our previous analysis I told you when the market clears a low, previous low, we are expecting the market to clear some high liquidity before pushing to the downside. Let me go to 4 hour time frame and show you that. You see down here, market cleared liquidity here, swept liquidity. So market had to sweep another liquidity before continuing to the downside. And we can see very clearly market swept liquidity above this high. Then from there reacted from this order block and from there push to break this low. Now that we have a break of structure here, you see here we have a break of structure. Then the same to the DXY, the same to the DXY. So the Euro USD, GBP USD is having a clean setup than the Euro USD. We have a break of structure here. And when the market takes out external liquidity, we are expecting market to take out some internal liquidity before pushing to the downside. And here you can see we have this eye here. So if I can go to 1 hour time frame, if I can go to 1 hour time frame, this is where we have a break of structure. So the only internal structure that you can see, we have this eye, we have this, and this. So this is my order block on 4 hour time frame. If you go to 4 hour time frame, you can see we have a clean order block above here. We have liquidity below it. So I'm expecting the market to come to this order block because this order block swept liquidity here. So this eye is a strong eye because it swept liquidity before pushing to the downside. So this is my point of interest. So I'm expecting to see market coming to this area before starting to push to the downside. If this area does not work, if this area does not hold the market, then I have this order block here from the daily time frame. Because if you go to the daily time frame, you can see very clearly the market, this is the area that the market broke the structure. You have a change of character down here from the daily time frame. And we know very clearly when the market takes out external structure, then we expect our market to take out one of the internal structure. And that internal structure now becomes this I right here. Comes this high, we have some liquidity above here. So this is the high. So we have these two relative equal highs. So if the market violates this zone, it will definitely come to this order block, and this is where we'll have reaction pushing to the downside, guys. So that is what I have on GBP USD. Now we are done with the dollar. So let me go to JPY basket. I'll start from the weekly time frame. I'll start from the weekly time frame. You can see very clearly here from the weekly time frame. Remember, we are doing top-down analysis, so it's good to start from the higher time frame, pushing down to the lower time frame. You see here, this is our last break of structure on the weekly time frame. Then we had our market came back to sweep this high, and from there, I tried to push the downside, came back again, swept this high. Then from here, let me go to daily time frame. You can see very clearly market broke the structure here. That this was the last break of structure before this change of character. Then after that, I think this was the last week we saw this break of structure. Then market pushed up and cleared some liquidity before pushing to the downside. So this was the last break of structure here. But now I have a problem with this break of structure because remember this push to the downside here. If you go to the GBP, JPY, and Euro JPY on a Owanda, that broker code Owanda, you'll find that this was a market opening gap. So I'm expecting the market to come all the way fill this gap, maybe react from this order block here. But now I'm expecting this is liquidity to be taken out because here there was no liquidity. So I'm still expecting this I to be taken out by either sweep of liquidity. Then from there we can start looking for sale. But for now, we are really bullish on GPY basket. We are expecting this gap to be filled up. Now going to GPP JPY because I have set up on GPP JPY. So from what we have seen on JPY basket, we are currently on a bullish retracement. So we are expecting to be bearish on GPP JPY. And going to forward time frame. So this was the last break of structure that we are talking about. Let me just go to Rwanda and show you GBP JPY. Let me go to Rwanda and show you that gap that I'm talking about. Let me delete everything. Sorry. You can see very clearly we had this new week opening gap, the same that we have on the DXY. So I'm expecting the market to come and fill this gap. You see this gap here. So I'm expecting the market to come all the way down to fill this gap before now we continue pushing to the upside. So now we are currently bearish here. So we should capitalize on this bearish movement. And going to 1 hour time frame, I don't see any clean setup here. So the only setup that I have is on 15 minutes time frame. You can see very clearly on 15 minutes time frame. This is our strong eye. We have our strong high here. This is our protected high. We have our protected high here there, which swept liquidity. We had a sweep of liquidity here as our inducement. Then after that we saw a break of structure down here. We have a break of structure. We use a different color. Sorry. Let me change this one to now. Yeah, we have a break of structure there. So my order block, it is this candle here, the last buy before the sell. That becomes my order block for my supply zone, which we have a liquidity below it. You can see very clearly here we have liquidity. we have liquidity. So now this is my setup. If we get this pullback, this should be our setup. You take your entry from this, stop loss above there, then your take profit should be below here. A risk to reward of 1:3. So this is my setup on GPP JPY. If we get that retracement, just I will take my entry from this area. Then the last pair that we are going to analyze today is gold, and I have a setup also on gold. If you look very clear, if you have been looking at the gold, you can see very clearly gold has been bullish, and during this week gold pushed to 4,000. Gold pushed to all-time high of 4,000, and in fact it pushed to 4,000 40 58, almost 40 60. So gold has been bullish, guys, for a very longest time. So let me go to 4 time frame. So guys, before I do this analysis, if you haven't joined my Telegram channel, guys, I will advise you to join the Telegram. I will leave the link on the description of this video. So that's where I do share my setups during the week. So remember, we only do all this analysis on Sundays. So during the weekday, in case I see any setup, I do share my overviews on that channel. So it's upon you to decide whether you are going to execute the trade or not. So during last week, we had this setup here. We had a break of structure here. This was a strong low, which swept liquidity here. So we had this setup from here. We were looking to buy from here, but gold, guys, never retraced to this low. What happened? Gold reacted from this order block that you see here. We have this order block here. So gold reacted from there and pushed to the upside. But now during this last week, I think on Thursday, market came to this point of interest that we had marked here. This extreme point of interest from the 15 minutes time frame, because this is the last break of structure that you can see here. This was the last strong break of structure. Though gold came back here, but now I didn't take this trade from here because now this one came here past my time, that is past my New York window, so I didn't execute from here. So what I did, I was waiting for a change of character, then from there I can take my trade. And you can see very clearly here we have a change of character, a strong change of character. We had an inducement cleared here, then after that we see a change of character here. Let me go to that minutes time frame. After this change of character, market created this inducement. You can see we have an inducement here. We had a fake break of structure. We are calling this fake because never swept any liquidity. So this is an inducement. So I am having this setup here on gold. We have this order block, 30 minutes order block, a liquidity above it. So I'm expecting to see a retracement to this order block. If the market comes to this order block, so don't here to execute the trade. Remember, the only worst thing that can happen here is just your stop loss getting hit. Nothing worse that can happen. So if we got that retracement, just execute your trade. Stop loss. Remember, the safest place to put your stop loss is below this low. But now I don't expect the gold to sweep this low because we have liquidity here. So I can decide to put my stop loss here, like that. Uh, Something of that sort. Then down there, I can decide to put my stop loss there. Where will be my take profit? This I, my external liquidity here. That one should be our target. So guys, that is it on our analysis today. That is it on our analysis today. So maybe on the comment section you can tell me which part do you want me to do the video on, because on Wednesday we normally by the way, guys, let me tell you this. On every week, I do upload my videos twice in a week. On Wednesday, on Sunday for analysis, then on Wednesday, I do teach something new. different from the analysis. So you can leave a comment on the comment section and tell me which part do you want me to do analysis, to not do analysis but to make a video on. But there is this guy that requested me to do a video on a multi-time frame analysis. So if I don't get any other requests, I will do that video on Wednesday on how to do the multi-time frame analysis. Although that is what we have been doing here. Multi-time frame analysis simply means doing the analysis from the higher time frame all the way to the lower time frame, of which that is what we have been doing on this analysis. So guys, I would like to stop at this point. So until next time, it's a bye bye for now. See you next. So have a nice week. I'll see you on Wednesday. Bye bye, guys.